You're living in Australia, working hard, paying taxes, and you're not even entitled to Medicare. So when tax time rolls around, it seems obvious to just remove the Medicare levy from your return. But there's a problem. Simply not having a Medicare card does not automatically mean you can claim that exemption. That assumption, that no card equals no levy, is one of the most common and costly mistakes made during tax season. To actually prove you weren't entitled to Medicare, you need an official document called a Medicare Entitlement Statement, or MES. If you skip this step and claim the exemption anyway, the Australian Taxation Office's data matching systems can flag your return. That rejected exemption can quickly turn into an unexpected tax debt. To get this right, you need to navigate three completely separate systems: your Medicare eligibility, your Medicare levy liability, and your Australian tax residency. They interact with each other, but they are not the same thing. Here is how they divide the work. Services Australia issues the NES. That document does exactly one thing. It certifies the specific dates when you are not entitled to Medicare. The ATO then uses those certified dates to calculate your final tax return. The MES itself is not a tax assessment. It doesn't prove your visa status, and it isn't a health insurance policy. Services Australia determines the dates, and the ATO determines the tax. Keeping that division of power in mind is the only way to secure a valid exemption. A lot of taxpayers assume that holding a temporary visa automatically means they aren't entitled to Medicare. That isn't always true. Certain temporary visas, like subclasses 491 or 494, are covered by ministerial orders. If you hold one of these designated visas, you might actually be eligible for Medicare, meaning you cannot get a full-year MES. Then there is the permanent residency trap. Consider Daniel. He is on a temporary visa from July through December. On January 10th, he submits a qualifying application for permanent residency. His actual PR visa isn't granted until October of the next financial year. Daniel might think he is exempt all year because his permanent visa wasn't granted yet, but legally, his Medicare eligibility can start on the exact date he submitted his application, provided he meets the other requirements. That means Daniel requires a part-year MES, covering July 1st to January 9th. He cannot claim a 365-day exemption. If you don't audit your exact immigration application dates before lodging your tax return, you risk claiming invalid exemption days. Let's look at another variable: Reciprocal Health Care Agreements, or RHCAs. Australia has these agreements with 11 different countries, and originating from one of them directly alters your MES application requirements. But the agreements are not identical. Take Elena's scenario. An international student from Ireland might not be eligible for Medicare under their specific agreement, whereas a student from Sweden often is. You have to check the exact rules for your nationality and your specific visa type. This brings us back to the most dangerous assumption of all. Take Ahmed. He legally qualifies for Medicare through one of these pathways, but he never actually completes the enrollment process. He never gets the physical card. At tax time, Ahmed thinks he is exempt. He's wrong. Because he was legally entitled to enroll, Services Australia will not issue an MES. The same logic applies if you lose your eligibility mid-year. If someone like Maria has an arrangement that ends in December, she can only get a part-year MES for the remaining months. Your tax outcome is entirely dictated by the parameters of your legal entitlement. You cannot rely on whether you possessed a plastic card or what your status happened to be on June 30th. The situation gets even more detailed when you file as a family. This chart breaks down Kevin's scenario. Kevin is ineligible for Medicare for the entire year, but his spouse becomes eligible in March. Kevin cannot just take his 365-day MES and automatically apply it to his spouse's tax return. Dependents and spouses affect the levy exemption calculation. Each family member must establish their own individual entitlement period, which means they may need to apply for their own separate MES. Another area where people get tripped up is private health insurance. Consider Sarah, who holds Overseas Student Health Cover, or OSHC, for the entire year. Sarah's OSHC proves she wasn't covered by Medicare, so she qualifies for a full-year MES to exempt her from the standard 2% Medicare levy. But we have to separate the Medicare levy from the Medicare levy surcharge. Her OSHC policy does not automatically count as complying hospital cover for the surcharge. Paying a premium for an overseas health policy is a completely separate legal reality from proving your Medicare non-eligibility for tax exemption purposes. So how do you actually get the statement? The standard annual process opens on July 1st, and you are applying for the financial year that just finished. You have two main pathways. You can upload copies of your passport and visa documents through the Medicare Entitlement Statement dashboard, which you access via the MyGov Individual Healthcare Identifier service. If you can't use the dashboard, you can submit the paper MS-015 form. Be prepared to wait. Services Australia specifically warns that applications submitted between July and November can take up to 8 weeks to process. Do not apply tonight and assume you can lodge your tax return tomorrow. You must consciously delay lodging your return until the official mess arrives. Guessing your dates will trigger a discrepancy with the ATO. When it is finally time to file, watch out for execution errors. A very common mistake is letting your tax software or even your tax agent auto-assume 365 exemption days just because you hold a temporary visa. In this example, the taxpayer assumed 365 exemption days, but their MES only certifies 210. You must enter the exact days certified. And remember the refund myth. An MES doesn't guarantee a larger tax refund. While it reduces your Medicare levy, your final tax liability still depends on total income, study loans, and the surcharge. The MES is strictly a compliance tool that corrects one specific levy parameter. It is not a magic bullet for maximizing your tax payout. Before you lodge, audit your actual eligibility. Check specific reciprocal health care rules, verify permanent residency application dates, and apply through official channels. When your statement arrives, use the exact certified dates. Evaluate your spouse's circumstances independently, and always keep the MES with your permanent tax records. Please note, the information in this research file was checked on August 11, 2026. The rules surrounding visas, tax residency, and Medicare interact in complex ways. You should always consult the ATO, Services Australia, or a registered tax professional for individualized advice regarding your specific tax and residency status.